Hi everyone, welcome to Market This Week. Week ended 9th of March 2018. It was a week which was marked by continuation of sell-off from the market. This is the chart of the Nifty, the weekly chart, which clearly shows that we have a breakdown in our hands. The previous swing lows, which held the market up for close to 3 to 4 weeks, have been given away now. I can clearly see that momentum indicators are suggesting that this fall is backed with momentum, and now we are eyeing close to the level which is close to the psychological 10,000 mark, which is close to the lows of December 2017. A quick check on the daily chart suggests that we had a one day bounce back which was counter-attacked on the very next day, which was Friday. Now it will be interesting to see how this week starts off, because as I take a look at the SGX Nifty trading, thanks to the global cues, it's trading close to 135, 36 points on the upside, level wise 10,350. So if this has to be a possibility on tomorrow's opening, as I record this on Sunday night, we are looking at a nice positive move, probably a gap up. But the most important thing to look for is whether it sustains after that gap up or not. Uh, the way I am looking into the daily and the weekly charts and the indication that I get from most of the signals, it seems like the selling is still left. A bit of selling is definitely still left on the cards. Um, Cautiously bearish is the stance. As long as the highs of 10,440, 450 is not taken out on the upside, I continue to maintain a bearish bias on the overall market. Any long trade will be very, very short term in nature, and the short sell trades are worth holding on for quite some time. So, cautiously bearish is the nature. Would love to definitely see how Monday opens up, and definitely how Monday closes. A quick check on the Bank Nifty chart, and that suggests a similar breakdown, quite more severe than that of the Nifty, and its previous intermediate lows is close to that 23,600. I'm talking about close to September 2007. Those are the immediate supports. Again, look at the RSI of different various time frames, and it suggests that the selling is very much, is very much intact and is likely to continue. Let's take a look at the sectoral indices and how they panned out over the last week. Metals were the biggest losers. The weekly chart of the Nifty Metal Index clearly shows a breakdown in the index, and the possibility is fairly high that it's likely to break the 3600 level and test its December 2017 lows, which is close to that 3500. Let's quickly take a look at the metal universe and any stocks that are showing signs of a possible bounce back or close to their supports. Um, we'll take a look at the daily chart, and that will help us because we can find any kind of divergences. Most of them are in a strong downtrend with orderly downtrend close to the three moving averages being in a nice order on the downside. I pay a lot of respect to that, which suggests that we are in a downtrend across all time frames. As I scroll down, we see that Jindal Steel is one stock which is a possible divergence candidate only if it takes out Friday's high, which is the 237, 238 mark. Weekly charts of most of these stocks are fairly weak. JSW Steel's similar picture. MOL, NALCO, NMDC, I don't see any kind of relief from this. SAIL was a big sell-off on last week, close to 14%. Tata Steel also a 10% cut on the stock, breaking down its previous lows. So it's a high momentum breakdown in the metal stocks. It can ease off, not the best of time to buy this because they are like a falling knife. So I would suggest that the metals can wait. The support should kick in. The selling pressures should ease off. Some amount of short covering and buying should evolve. Then only we should be probably looking to get into any of these metal stocks. So please stay away from them. PSU banks, never like them, never will. The only stock that I keep a close watch is that of State Bank of India. And what do we have? We have a 3.5% cut last week. Indicators, possibility of divergence from a short-term point of view. Important level the stock should take out on the upside is last week's high, which is a 266. Quick look at the daily chart, and it's been in a steady downtrend for quite some time. No sign of any divergence on my momentum indicators, but it's back to its lows from where we had that big move on the 25th of October. Uh, Supports from this level, psychological supports from this level should kick in, which is clear from the weekly charts. As you can see where I've kept my cursor, this level has been holding the stock up for a very long time. So 240, 245, make or break zone for State Bank of India. If 240 is given away for the stock, then you can expect that this stock is going to stay weak for a very long time. Considering the fact that it's been coming off 5 out of 6 weeks, it's posted a down move and it's been come off quite sharply. This 240, 245 psychological support should hold for a short-term bounce back. We should see a bounce back and stocks coming back close to these averages. Not a buy signal yet. Yes, we have an outside day on Thursday. If it goes above Friday, Thursday's high, which is a possibility, it can inch up, but I will not suggest to participate in this kind of bounce back. 4.5% down from the Nifty pharmaceutical index. Pharma had been in a downtrend for quite some time. There's no doubt. Quick check at the weekly charts. What do we see? Index is back to its August 2017 lows. Let me quickly show you the monthly chart, and you can clearly see the kind of downtrend that we are in right now. One important thing to look for the pharmaceutical space is the pharmaceutical index, is that support close to that 8500, 8325, 8400 zone is coming in from March 2014 highs, which is close to the recent lows as well on the monthly and the weekly charts. So this level, which is close to that 8300, 8350, let's say 8300, 8400, this is the important zone at the current juncture for the Nifty pharmaceutical stocks. No confirmation of a possible bounce back, so I suggest that this weakness will persist, and as it has been the case for any short-term rise have been seen resistance and it has sold off, it's likely to continue. Let's quickly take a look at the pharmaceutical stocks and figure out if there are any stocks which stands out for a possible contrarian buy. There we are, pharmaceuticals. So Aurobindo Pharma has given a short-term bounce back. Important thing to see whether it follows through or not. Let's look at the weekly charts for any form of divergences. Cadila, nothing that interests us. Cipla, not. Divi's lab has a possibility of a divergence over here on the momentum indicators. The trend is up. This is one exceptional within the pharmaceutical stocks where we have orderly stock in terms of its moving averages. So if Divi's lab takes out the immediate highs of 1026, 1027, we've got a quick short-term move in our hands. I always turn the chart into a line chart when I confirm a divergence. That should be the habit, because on a line chart you can see the divergences really well. Glaxo gave away completely on the last week. Glenmark buying some time, bouncing back from that 522-23 zone multiple times. Again, a good source of support for the stock. Nevertheless, strong downtrend. Lupin, the pain continues, 764. I have an interesting setup on the monthly chart of Lupin, and my sense for Lupin is if it takes out that 824, 825 on the upside, yes, 824.5 is far away from 764 right now, but I am showing this on a monthly chart. And once 824, 825 is taken out on the upside, I think the pain in Lupin for the rest of the year is done with. I sense that above 824, the monthly charts will definitely improve. So contrarian traders, if you're looking to buy into Lupin, you can accumulate at this price, but definitely look to enter once it takes out 824 on the upside. On the other end of the sectoral indices, nothing much. IT, we all know, have been holding up really well. HCL Tech, Tech Mahindra, Infosys, not bad. But it's the media which have lost less. All of the sectoral indices have lost, but media has lost less. And within that, I think it's TV18 broadcast is the stock which held on well. It's in an uptrend, orderly, holding pretty well. Clear sign of resistance close to that 64 mark. So if you have that breakout, one can definitely look to chase the stock. As I said, in this kind of a market environment, I'm going to be cautiously bearish. My bias is on the downside. I will be looking for the Monday's strong opening. I'll be looking whether that strong opening holds or not towards the afternoon. If it doesn't, there you go, off to selling the market as right again. So with that, I think it's going to be an interesting week. It's going to be a good start. Whether it ends good or not, that's a million-dollar question. My overall sense is the current lows are likely to get breached. It's going to probably come and tease the psychological 10,000 mark, and that is where probably a little bit of panic can come in. That is where the last buyers would like to sell, and that can mean a possible intermediate to long-term low of the market. Till then, I think that we should stay with the trend, which suggests that the market is still in a weak zone. Thank you everyone for listening to Market This Week. Like always, trade well, trade wise. Thank you.